Welcome once again to this yet another edition of Market Simplified. I am Milan, Vaishnav. Over the past 2 days, markets have been extremely weak, and today on June 13th, we witnessed yet another gap down opening. And over the last two sessions, the Nifty has been down for close to 700 points in just two sessions. So the big question arises is that should we be using this weakness to buy or should we refrain from buying? And the answer to this is not simple. Nifty, so long as it is not violating 15,700, it is still subject to some short covering fuel rally so long as it is able to keep its head above 15,700. So this being said, we still have certain pockets in the market which are highly stock specific in nature, and they are showing very good resilience and very good and strong relative strength in the markets. So we take a look at three stocks, one from auto, one from cement, and one from the chemical space, which provide us a good buying opportunities in this weak market. And more importantly, they are doing very good on the relative strength. I mean, they are relatively outperforming the broader markets. So just let us have a look at these stocks. The first one we'll take a look would be the Maruti. Maruti, it is a part of auto index, and auto index itself is in the leading quadrant of the RRG when benchmarked against the broader Nifty 500 index. And Maruti, individually speaking, has just rolled inside the leading quadrant. So this means that auto index in general and Maruti in particular are likely to relatively outperform the broader markets. So let's take a look at the technical charts of Maruti. Maruti has shown a very strong and rising relative strength line against the broader Nifty 500 index. Apart from this, it has got multiple resistance points between 7900 and 7930. But apart from that, the recent price action over the last couple of weeks has shown that it is under formation of a bullish ascending triangle formation. And apart from that, it is above its all key moving averages, that is 50, 100 and 200 DMA. So keeping this stock with and its strong relative strength in view, we recommend a buy above 7950 with the target of 8225. Any move on closing basis below 7850 will negate this view. Let's move on to the other stock. The other stock we have is Ambuja Cements. Essentially, Ambuja Cements is under a Bollinger Band squeeze. Bollinger Band squeeze happens when the stock is showing a low volatility moves, and usually the period of low volatility is always followed by a period of high volatility. So essentially speaking, Bollinger Band is a neutral formation, and the movement can be on the either side. However, if we take into account the other piece of evidences which are present on the chart, there is a higher likelihood that this formation resolves with the continuation of the up move. After a steep rise from around 300 levels to 373, the stock has been more or less in a sideways formation. It's been consolidating in a wide range between 360 and 380 levels. And right now, the price action has seen a formation of a symmetrical triangle. Once again, this is a neutral formation. So one must wait basically for an actual price breakout before taking any directional call in this stock. So the price move can be on the either side. It can be on the upside, but it can be on the downside as well. Same is the case with the Bollinger Band squeeze. So we must always wait for the confirmation of the price action before we take any directional calls. So having said this, it is also important to note that Ambuja Cement also resides in the leading quadrant of the RRG. So its relative momentum and relative strength vis-a-vis the broader markets is very good and strong, with rising RS line as just seen on the bottom panel. So we recommend a buy of the stock above 366 with a target of 390. It should be borne in mind that any move below 357 on closing basis will negate this view. The last one in our pick is Aarti Industries. Aarti Industries has been under a secular decline. It formed a high above 1100 and a lower top somewhere around 1100, and since then it has been under a general decline, but has shown some some symptoms of formation of a potential base. If you look at the recent price action, it has shown a very strong bullish divergence of RSI against the price. This bullish divergence has occurred because while the price continued to make lower lows, the RSI did not. In fact, it was seen making higher lows. So the RSI is making higher lows while the price was making the lower lows, has resulted into a bullish divergence of RSI against the price. Now, should be remembered that RSI essentially is a leading indicator, and it is also subject to a routine pattern analysis just like the price. So what is seen on RSI can be treated as a prior indication of what we may see on the price going ahead. So there are strong chances that the stock forms a base near between 680 to 700 levels and moves higher. Apart from this piece of evidence, the daily MACD has also shown a positive crossover, and it is now above its signal line. So there are very bright chances that the stock forms a potential base, finds a potential bottom for itself between 680 and 700 levels. So we recommend a buy this stock above 715 with a target of 745. Any move on a closing basis below 688 will negate this view. We will be back again with such actionable ideas in couple of days time, and I am sure that whatever we are showing in such clips will add some value to your trading and investing activities. I would request you to leave your comments or feel absolutely free to get in touch with us if you have any questions. By the time we are back again with a new clip or a new episode of Market Simplified, don't forget to like this channel and stay subscribed. Thank you.